Today we start with the enterprise structure for controlling. So controlling also we have to maintain the enterprise structure. So in FI, everything is configured with reference to company. But in controlling, everything is configured with reference to controlling area. So what is controlling area? It is the organization unit in controlling for which the controlling activities are conducted. It is very, very widely definition. See, controlling area. It is the organization unit in controlling for which all the controlling activities are conducted. At this level, the CO component records, analyzes the overhead related activities, means cost revenue, cost center accounting, and interactions. Then, manufacturing related activities and expenses, that is product costing, and also analysis and evaluation of activities of internal units. That means here all the activities which are going to perform from now onwards are performed with reference to control. So first we have to maintain the controlling area. But there are two scenarios in which we can maintain the controlling area. Number one, controlling area, same as company. Means in this case, the controlling area is maintained at the company code level. That is, for each company code, we create a separate controlling area. For each company code, we create a separate controlling area. Means, for example, under your company, that means under your group, we have three controlling codes. For the first company code, we create a separate controlling area. For the second company code, we create another controlling area. For the third company code, we create another controlling area. So controlling area same as company code means we assign only one company code to one controlling area. So when we assign only one company code to one controlling area, then all the expenses and incomes of each company code is taken to the respective controlling area for the analysis purpose. That means, for example, right, this is the company. Under the company, we have the company. So at the company code level, we maintain the controlling area. Then, under the controlling area, we maintain the master records for controlling objects. Means, what are the controlling objects? Cost center, internal order, profit center, profitability segment, cost object. These are all controlling objects, right? So we maintain the master records for the controlling objects under the controlling area. Then in each controlling object, we assign the business areas. That's how CO enterprise organization units and FI organization units are linked with each other. We assign the business area in every controlling object master, right? So when we use this scenario, means controlling area same as company code, but we cannot use the following functionalities. Means we cannot use cross company code functions. We cannot use cost to component split. We cannot implement group costing, and we cannot implement transfer pricing. So what are all these things? For the time being, just read them as it is, right? So when we use the scenario one, controlling area same as company code, then we cannot implement these four functions. Then second scenario, cross company code, cost account. In this case, controlling area is created at the company level. Creating the controlling area at the company level means we assign all the company codes of the company to the same controlling area. That is group level. In this case, several company codes are assigned to the same controlling area. Then all the expenses and incomes information of all the company codes will be available in the same controlling area. Then we can compare the expenses and incomes of one company code with the expense and incomes of another company. For example, this is the group, right? Company. Now, under the company, we have two company codes. Company code 1, company code 2. Then we maintain the controlling area at the company level. That means after creating the controlling area, we assign both the company codes of this company to the same controlling area. That is called cross company code cost accounting. In the case of cross company code cost accounting, we assign multiple company codes to one controlling area. So that is called cross company code cost accounting. In this example, we assign two company codes to the controlling area. As a result, the expense and incomes information of company code 1 and company code 2 are available in the same country. As a result, we can compare the total cost of company code 1 with the total expenditure of company code. When we assign, in this example, when we assign these two company codes to the same controlling area, all the expenses and revenues information of both the company codes are available in the same controlling area. As a result, we can compare the total expense of company code 1 with the total expense of company code. Similarly, we can compare the total revenues of company code 1 with the total revenues of company code 2. And also, we can compare the total profits of the company code 1 with the total profits of the company code. Clear, no? That's why this is called cross company code cost accounting. Then all the cost centers relating to both the company codes, internal orders relating to both the company codes are created under the same controlling area. Then in every controlling object master record, we assign the business areas. Clear? Now, in the case of cross company code cost accounting, right, means when we assign multiple company codes to the same controlling area, we can compare the performance of company code 1 with the performance of company code 2. In addition to that, say for example, Monica, can you please mute yourself? Monica, please mute yourself. Please mute yourself. See, when we assign multiple company codes to the same controlling area, we can compare the performance of company code 1 with the performance of company code 2. In addition to that, right, say for example, the company code 1, you have department A, department B, department C. Then in the company code 2, we have department P, department Q, department R. So in addition to comparing the performance of company code 1 with that of company code 2, we can compare the performance of department A of company code 1 with the performance of department P of company code 2. Means we can compare the total cost of department A with the total cost of department P. Similarly, we can compare the performance of department B of company code 1 with the performance of department Q of the company code 2. Similarly, we can compare the performance of department C of company code 1 with the performance of department R of company code 2. Means at the company code level, we can compare the performance. In addition to that, intercompany comparison also we can do. Departmental comparison of both the company codes also we can do. So the advantages of cross company code cost accounting. We can reallocate the costs across the company codes. Product costing for all the products of all the company codes. It facilitates group costing. It facilitates transfer pricing among company codes. For the time being, we just read these points, that's it. Whatever the functions you cannot implement in the controlling area, same as company code first scenario, can be implemented in the second scenario. Now, this is very important now. Here, to assign several company codes to the same controlling area, the following two conditions must be satisfied. Remember, to assign several company codes to the same controlling area, the following two conditions must be satisfied. Number one, all the company codes should use the same chart of accounts. Compulsory must and should condition. Then all the company codes should use the same fiscal year. That means the number of normal posting periods should be same, but the number of special periods can be different. Then the start period and end period of fiscal year should be same. And the start date and the end date of each period also should be same. Unless these two conditions are satisfied, right, we cannot assign multiple company codes to the same controlling unit. So if these conditions are not satisfied, and if you are trying to assign the company codes to the controlling area, system will give the error message. So in order to assign multiple company codes to the same controlling area, all the company codes should use the same chart of accounts, and all the company codes must use the same fiscal year. Okay. Now let us see how to maintain the controlling area. First, let us start with the first scenario. Controlling area same as company. After some time, we will go for cross company code cost accounting. So maintain controlling area. SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. Click on events. Controlling area is equal to SSKV. I am using our company code name only. Controlling area is equal to SSKV. Name is equal to controlling area for SSKV. Controlling area for SSKV. See, look at the scheme. Assignment control. Company code to controlling area. If you press on this drop down menu, you can see two scenarios. Controlling area same as company code, cross company code cost accounting. Right? So here I am using controlling area same as company. Currency type is equal to 10. Company code currency. Currency type is equal to 10. Company code currency. Here, from now onwards, when we post any transactions in any of the modules, the system automatically posts the documents in controlling also. Means in the controlling area, in which currency the documents are to be maintained, in which currency the business transactions are to be maintained. So when you're using controlling area same as company code, right, we have only one option, company code currency, right? Right down there. Currency type of the controlling area determines currency type of the controlling area determines the currency in which the business transactions are maintained in the controlling area. But we cannot push the business transactions directly into controlling area. We cannot push the business transactions directly into controlling area. The controlling area is always updated automatically only. Is always updated automatically only through postings from other modules. Through postings from other modules. Okay. So here 10 means company code currency. So the business transactions in the controlling area are also maintained in the company code currency model. So when you're using controlling area same as company code, we have only one option, right? But if you use second option, right, cross company code cost accounting, currency type also we have the different options. These options I will explain. Okay. Then currency is equal to INR. Chart of accounts is equal to SSKD. Fiscal year variant V3. Fiscal year variant V3. Cost center standard hierarchy is equal to SSKV underscore HIR. Cost center standard hierarchy is equal to SSKV underscore HIR. So what is the cost center standard hierarchy? Cost center standard hierarchy. It is the arrangement of the cost centers in the hierarchical manner where the cost can be captured and analyzed meaningfully for reporting purpose, which supports managerial decision making. See, simply saying, cost center standard hierarchy is only the arrangement of the cost centers. That's it. It is mandatory to define the cost center standard hierarchy for each controlling area. And there can be only one cost center standard hierarchy for controlling area. You can't see the message given by system. Standard hierarchy SSKV underscore HIR does not exist. Should system SSKV underscore HIR be created as standard hierarchy? Compulsory, we have to click yes on the message. Then, double click on assignment of company codes. Click on new entries. Company code is equal to SSKV. So we have only one company code, and I'm assigning that company code only to the controlling area. Write down again there. The relation between the company code and controlling area, the relation between the company code and controlling area are established by assigning the company code to the controlling area. Click on save. Now, double click on activate the components and control indicators. This one. So whatever the modules you want to implement in controlling are to be activated here. Click on new entries. Fiscal year is equal to 2022. So from the fiscal year 2020, cost centers. Here, for the cost centers, system default status is component not active. Means we cannot implement cost center accounting. You cannot create cost centers. Now, if you want to implement cost center accounting, you have to select component active. So for the cost centers is equal to component active. Select activity type. Then order management also component active. Order management means internal order accounting. Select profit center. So profitability analysis cannot be activated here, right? So this has to be activated later on at the time of profitability analysis. At that time, I will show you how to activate this profitability analysis. Click on save. Ignore the message. Now, the currency type. The currency type determines the currency in which the business transactions are posted to and maintained in controlling area. If we are using the scenario, controlling area same as company code, we have only one option, that is company code currency. But when we are using the cross company code cost accounting scenario, then any one of the following currencies can be taken as the controlling area currency. 10, company code currency. So the currency of any company code assigned to controlling area can be taken as controlling area currency. Otherwise, controlling area can have a separate currency. Otherwise, group currency can be the controlling area. Otherwise, hard currency can be the controlling area. Index-based currency can be the controlling area currency. Global company currency means company currency. We define the company, no? And we also maintain the currency for the company. That is called global company currency. So the global company currency or the company currency can be your controlling area currency. You know, group currency is defined at the client level, right? Hard currency and index-based currency are defined at the company code, country level. Say, for example, right here, controlling area, I have selected cross company code cost accounting, right? So if you select a group currency, so where we can display the group currency, SEC4, right? So euros. So here for the controlling area, if you assign group currency 30, then euro will be your currency. Your currency means your controlling area currency, right? Suppose If you enter 40 hard currency is USD. How can you say hard currency USD? Here, this hard currency, index-based currency are defined at a country level, right? This already explained you at the time of group currency in F5. We can define our own countries, right? SAP Net Euro, SPRO, SAP Net Euro, general settings, set countries, define countries in my SAP system. Click on position, country is equal to IN, click on enter, details. See, hard currency USD was defined. USD was defined as hard currency at the country level India. So, if you take the 40 hard currency, system will use USD as the controlling area currency. Suppose if you take 50 index-based currency, GBP will be taken as controlling area currency because in the country level, right, index-based currency is defined as GBP. Right? Suppose if you take global company currency, INR. Right? This is our company, right? So INR. Got my point? So like that, first here I am using controlling area same as company code. Later on we will see cross company code cost. So we have assigned we have defined controlling area. Okay. Then maintaining number ranges for controlling documents. So from now onwards, right, when we post a document in F5, controlling documents are also automatically posted, right? In that case, in order to identify the controlling document, we use the number ranges. But in controlling, there is no document values. But there are some activities. What are those activities? So in controlling, we perform some activities. So when we perform those activities, the system has to assign a number to the controlling document. I will show you, I will explain you while defining the number ranges. Maintaining the number ranges for controlling documents. Path is same as it. Maintain number ranges for controlling documents. Controlling area is equal to SSK. Click on maintain groups. See, these are the activities which we can perform in the control. Remember, these are only the activities which we can perform in the control. Okay. So we cannot perform the activities other than mentioned here. Now, click on maintain groups. Click on create button. This is called create button. So group is equal to number ranges for controlling area SSK. Group is equal to number ranges for controlling area SSK. From number 1 to number 1. From number 1 to number 1 level. Click on save. And enter. Click on back arrow. Click on back arrow. Keep the cursor on coin transaction. This one. Keep the cursor on coin transaction. Click on assign element group. Double click on number range number 0. See, look at the screen. Here, number ranges for controlling area, right? Coin transaction was assigned. What is this coin transaction? I will explain you from the cost center. After that, keep the cursor on RKP1. RKP1 means planning primary costs. Keep the cursor on RKP1. Click on SN element group. Double click on number range number 01. Again, see, RKP1 was also taken under number ranges. Then keep the cursor on RKU1 transaction. RKU1. RKU1, repost costs. Click on SN element group. Double click on number range number 01. Then keep the cursor on RKU3. Sorry, in between I missed one. Keep the cursor on RKIU. Keep the cursor on RKIU. Click on SN element group. Double click on number range number 01. Then keep the cursor on RKU3. Click on SN element group. Double click on number range number 01. Click on C. Look at the screen now. Here, 5 transactions are assigned to controlling area number ranges. These are called controlling transaction or controlling activities. So whenever we perform these activities, right, the system will post one CO document. For that CO document, the system will take the number from this number range. So what is this coin process? Right? See, coin means CO to posting from FI. RKIU means actual overhead assessment. RKP1 means planning primary costs. RKU1 repost costs. RKU3 repost CO liabilities. Right? So these are all different activities. What are these activities? I'll be starting explaining from cost center content. For the time being, define the number ranges for these activities. Throughout our controlling training, we are going to assign many more activities to the control area. Then maintain versions. So version means what? Maintain versions means maintain planning version. So what is version? See, it is a set of values for alternative plans. It is the set of values for alternative plans. What is the meaning of alternative plans? Here, the main purpose of the controlling component is to provide the information to the management for the performance analysis. Performance analysis means comparing the actual performance with the target performance, and we decide whether we are working efficiently or inefficiently. So the actual performance is to be compared with the target performance. So how the target performance are set up? They are called performance indicators. They are also called standards. So in order to compare the performance, actual performance, at the beginning of every year, the management will set the targets for the performance indicators. For the purpose of setting out the targets, the top management will ask the planning department to submit the plans for the current every year, right? Then the planning department, based on some assumptions, right, they submit different alternative plans. Say, for example, the management, the planning department has submitted 3 plans. Number 1, optimistic plan. Optimistic plan means, right, positive thinking. So we are assuming that everything is going to be favorable for the company in the coming year, and we're expecting good rains. As a result, we're expecting good crops, and also we are also expecting that there will be good demand for the crops and there will be good prices. As a result, there will be good amount of money available in the hands of the people. As a result, we will be having very good demand for our products. If that is the case, right, we will be able to sell 160,000 number of units. Then moderate plan. Moderate plan means we are not expecting any change in the coming year, right? The performance and the situation will be as in the previous year, right? Then pessimistic plan. Pessimistic plan means negative thinking. In the most worst conditions, you will be able to sell 120,000 units. In the moderate plan, you will be able to sell 140,000 units. So if you have to sell these quantities, right, we have to produce these quantities. In order to produce these quantities, we incur number of expenses. For example, material cost at 10 rupees per unit. So in the optimistic plan, the total material cost will be 16 units. 160,000 number of units into 10 rupees per unit, right? In the moderate plan, it will be 14 units. In the pessimistic plan, it will be 12 units. Then labor cost at 5 rupees per unit. So under the optimistic plan, right, it is 8 lakhs. In the moderate plan, it is 7 lakhs. In the pessimistic plan, it is 6 lakhs. Then other expenses at the 2.5 rupees per unit. Under optimistic plan, it is 4 lakhs. Simple. Total quantity to be produced into cost per unit. Then moderate plan, 3,50,000. Pessimistic plan, 3 lakhs. Then rent is the fixed expenditure. Means whatever may be the total output, this expenditure will not change. For example, factory rent. So whether you produce 1,60,000 number of units, or 1,40,000 number of units, or 1,20,000 number of units, you have to pay completely the factory rent, right? So factory rent is 3 lakhs under each plan. Like that, for every expenditure, for every revenue, right, the planning department will submit the plans under different options. Now, under the optimistic plan, the total cost of production is 31 lakhs. Under the moderate plan, the total cost of production is 27,50,000. Under the pessimistic plan, the total cost of production is 2,40,000. This is called version. New version means set of values for alternative plans. This is called version 1. This is called version 2. This is called version 3. Now, all these 3 plans have been submitted for the management consideration. And the management has decided to go with the first plan. So the managements are always optimistic only, right? So they have decided to go with the first plan. Then these values will be your targets. You have to produce and sell 1,60,000 number of units. If you are not able to sell 1,60,000 number of units, what are the reasons? Analyzed by the management. So in that case, your total cost of production should not be more than 13 lakhs. Your material cost should not be more than 16 lakhs. Your labor cost should not be more than 8 lakhs. And your other expense should not be more than 4 lakhs. Like that, these values will apply as are applied as performance indicators. Now, in order to compare the actual performance with the targeted performance, right, we need actual values and planned values, right? So from where the actual values are coming? Actual values means actual expenses and actual revenues. From where they are coming? From different modules. So whenever the expense and revenues are posted, right, they will be updated in the default version in the controlling area. Then the user enters the values of the accepted plan in the default version. So in the default version, we have the actual values and planned values. So from the default version, we can generate the variance reports. Variance reports means the report showing the differences between actual values and the planned values. That's why we have to maintain one version as default version for each controlling area. That is the meaning of maintain version. Maintain default version for the controlling area. But the system defined default version is 0. So we also have to maintain the 0 version as default version for the controlling area. So whenever the actual values are posted in any of the modules, those actual values will be transferred to 0 version, the controlling area. Then the user enters the planned values in the 0 version of the controlling area. From the 0 version, we can generate the variance reports. Clear? So path is same as well. Transaction code is not there. Okay, just a minute. It is there. Transaction code is there. Maintain versions. Select 0 plan or actual version. Double click on settings for each fiscal year. Controlling area is equal to SSKV. Controlling area is equal to SSKV. Click on enter and save. Right down there. System maintains the default version 0. Sorry. System maintains the 0 version. System maintains the 0 version as default version. As default version for 5 years. For 5 years. After 5 years, again we have to maintain the versions. Again, we have to maintain the versions. Click on save. Click on save. Now, double click on the current year row. See, under planning, select integrated planning. Select integrated planning. Means here, by selecting this indicator, the system allows to transfer the planned data from the cost center accounting to other components like profit center accounting and to write line items for each change in the planned data. So the line item documents keep a record of every planning change. Manually setting or deleting the integration indicator is possible only as long as no plan data exists. Means here cost centers are very much closely linked with the profit centers. So if you enter integrated planning, when you select the integrated planning, when you enter the planned values in the cost centers, they will be posted to profit centers also, right? See, normally in the real time, we select integrated planning, but do not select in your practice, right? Do one thing, select integrated planning is there, no? In brackets, within brackets. Do not select integrated planning checkbox. Do not select integrated planning checkbox in practice. Okay, then copying allowed. Means here, if this indicator is selected, we can use this version as a reference for generating the values for another version. Means we can create a new version by copying this version, nothing else. Then exchange rate type M. If you enter the planned values in the controlling area for the foreign currency business transactions, they have to be converted into controlling area currency using M rate. Okay. Then value date is equal to 1/4/2022. Then under orders and projects, for the time being, right, just to select this. Under orders and projects, right, select integrated plan. Within brackets, do not select in practice. Then version for indirect activity allocation 0. So what is this indirect activity allocation? We will discuss later on in the cost center. Then click on price calculation tab. This one. Click enter on the message. Then planned method. Select periodic price. Sorry, here. Under plan method, select periodic price. Actual method also, select periodic price. So what are these prices? We will discuss in the activity types of cost center accounting. Then revaluation, select own business processes. Then click on save. Now, you take up the next step. Step number 4 is take it. Here I have given how to define our own planning versions, nothing else. So, cost element accounting. So these are the basic settings for controlling. In controlling, the configuration is very low, but logic is very huge. We have to understand a lot of logic, right? So tomorrow we start cost element accounting. Any questions from anybody?
Yes, sir. I have a question, Afzal.
Tell me, Afzal.
Sir, how we can see the trial balance in F1?
F1.
Yes, I want to see the trial balance. Yeah, because we started and after finishing the asset model, we started with the
I have shown you
profit
already.
and loss.
This is the transaction code. S_ALR_87012310.
Okay.
Chart of accounts SSKV. Company code SSKV. I gave you the notes also. See, this is your trial balance. and I don't require these columns, right? In that case also, I told you how to remove these columns.
Right.
See, this is the trial balance. So accumulated value debit, accumulated value credit. Beginning balance. Accumulated value credit. This is the trial balance. I give you the notes also to write down the steps and all these things. And also I have told you how to export this to Excel sheet also. Okay?
Right. Right, sir.
Okay.